gaps. Alright, now we should be good. We should be good. Okay, yeah, we're good. We're good. Alright. So, what you don't see on this chart is the new week opening gaps. I have that here on a second layout. So I have all the new week opening gaps here on a second layout. I also have the new day opening gaps on a second layout. So I'm just going to put that over here to the side. And yeah, we just hit the new week opening gap below from August 5th, right? So that's this low right here. I want to see if price wants to go lower, and if it does, we're going to target this reclaimed fair value gap and this SIBI right here. Those would be the two targets that I'd be looking at. Let me also open this. Alright, yeah, we don't have any new day opening gaps up here, so hey, what's up, Gorilla? Yeah, no new day opening gaps here up here, so I'm just gonna close this layout for now and just keep the new week opening gaps up. That's what this high is right here. Notice that it's a weekly open that matches that new week opening gap. I already took a couple trades on a couple different accounts. Like I can switch account here to I think this one. I believe this is the one I took the yeah, I went long prior to the 8:30 time in this small little fair value gap. Reason being is because prior to 8:29 we disrespected the SIBI here and respected the 15-minute BISI, right? So at 8:29 it dropped down into that fair value gap. I went long. My stop loss was below consequent encroachment of the 15-minute fair value gap that you see here on the left. And my target was the new day opening gap at 146, 147. I also had this high. I had a line at this high because this is the 4-hour SIBI. So I already expected price to be going higher. We had a bunch of new day opening gaps up here. The 4-hour SIBI, we had a large down move yesterday. So price prior to 8:30 was already showing that we were respecting 15-minute discount arrays. This is an inversion fair value gap, inversion 15-minute. And also we had relative equal highs as well from 7 a.m. range, right? So I was already expecting price to go higher, resulting in that long. On this account, I took one trade. This was a 7 o'clock trade, relative equal highs, same 15-minute fair value gap. I was actually using this one, I believe, from 4:45 to target these highs right here. That's posted on my YouTube channel. So now I have an account that I trade only after 9:30. So this is what we're going to be using here. We closed above the new week opening gap from August 5th. So I'm kind of just sitting on my hands for now. because we're at such an extreme where I really don't want to long. We do have the relative equal highs from uh, up here from yesterday, which would be a nice target, but I need to see that this new week opening gap isn't going to send us lower, right? Because we could easily go down, reclaim this BISI right here. We could reclaim this BISI after this closes or even before it closes and then go higher. So, how long have I been trading? I've been trading for about 4 years, bro. 4 years YCT. It's been a good journey, man. It's been hard. It's been hard. You got to put in the work, honestly. When I first started trading, I never used to backtest. I would just take ICT's word, for what he said. I would just take it face value and run with it. And you don't really trust it. It's exactly what he says. You don't end up actually trusting the setups. Even if you do trust it, you don't actually know when you should be getting out or where your stop loss should be because you haven't back tested and seen how the market reacts um, in that setup or model, in the past, right? So how would you know when price is going against you? What are some things that you don't want to see, right? So it's a lot of that. I took a long, I posted it on my YouTube channel from here at around 160 to these relative equal highs at 255. It was about a 90 to 100 handle run. The reason behind this setup, which again you don't see here on this chart, is because of we hit consequent encroachment of a new day opening gap here that supported price. Then we reclaimed another new day opening gap here. Or sorry, here. This was the high of the new day opening gap to go higher. 4 years, Chris. 4 years. Four years, my boy. So first thing that comes into mind is this imbalance right here, this SIBI. It was never traded back into, and then those relative equal highs as well. Would be pretty bullish if we were to take that out. It's just kind of how August is. I mean, we have these relative equal lows here, and off a dime, price trades all the way back up into this. If you were looking at this from high to low, we're pretty much at like 79% retracement level, right? Like, let me check this out. Yeah, 79% on the dot. But we have a bunch of new week opening gaps above us. I just need at least a 5-minute for value gap. What I don't like right here is that the 5-minute candles, if you notice that, it's closing below the weekly open, and that's a new week opening gap, right? For August 5th. So that's not a great sign. But we're going to see if when this 15-minute fair value gap forms, if we dip into it, there'll be a 1-minute entry. So we can go higher and we can target consequent encroachment of that gap, which is this gap right here. Since we're so close to it, I'll even put it on this chart for y'all. A weekly open, yeah. Weekly close, weekly open. And we could put the quadrants on here as well. So you see how price is closing right at that level. So I really want to see a run up here into SIBI. We're gonna see if we can come back, reclaim this 15-minute BISI right here, and use this new one to trade higher into that, possibly consequent encroachment. Even the 25 or the lower quadrant, which is inside this SIBI, this is a great target too, or even the low, right? It all depends on what your expectation of price is that you can expect to go like if we go long right at the low of this fair value gap, that's 355 to that weekly open or the low of the new week opening gap at 390, that's 45 handles, bro. Like, how much do you need, right? I do think we'll go into the 15 minutes to be here. Did we hit consequent encroachment here? We failed to hit consequent encroachment here. So this is kind of what ICT was showing. Oh, but this is a down close candle though. I was gonna say this is kind of what he was showing in the not today's live stream, but yesterday with the bond auction sales when he took a short around the 1240, 1230, 1240, 1250 time. It was a setup like this, but the only difference is that he had two SIBIs, right? And then the candle that went into the fair value gap, it was an up closed candle, and it didn't hit 50% retracement level. So I'm gonna go ahead, just draw this out real quick. It's possible we don't even trade into it, but I want to see it reject new week opening gap. If it rejects new week opening gap, that's for sure going down there. That's kind of like the narrative behind it. If it doesn't reject it, then higher it is. Consequent encroachment of the new week opening gap, this red line right here. The 15-minute, we have been rejecting it, not even hitting the quadrant. So not even hitting that. Either way, there's going to be a trade. Whether it's long or short, there will be a trade around here. Macro time is coming up. 10:50 macro. You guys can hear me fine, right? I'm not listening to my own stream. Put it in chat if you can hear me. I do have a small delay on the stream because I don't want anybody copying my trades, because I just, that's totally up to you. You know, your trades are ultimately your decision, and you can't place the blame or anything on anyone else. Appreciate it, Abdi. Nice. Alright, so we failed to come down into this 15-minute fair value gap, but we did make this failure swing here. Relative equal lows. Part of me would like to go long here, targeting this 15-minute BISI and the lower quadrant of this fair value gap. But I would like to go long if we had a higher time frame discount array, right? So if we were in this 15-minute BISI, I would be taking that all day. All day. I would take that all day. Also relative equal highs here that we just swooped out. Seeing how we took buy side here, If we came back down into this, I wouldn't like it as much because we have this fair value gap here. We took buy side, and we're also in the lower quadrant of the new week opening gap. And I like to use the new week opening gap as a draw, right? So, for example, here, I shorted using this breaker right here, this down close candle right here. This is a breaker because you have your high, your low, higher high, lower low. This down close candle right here, we validated here, traded back up into it. I took a trade somewhere around here, targeting the new day opening gap at 99. Again, you should have it on your charts. If you have a second monitor, you can have it up. But at 99, there was the new day opening gap. And then at 66 is consequent encroachment. It came down about a handle and 3/4 below it, and then reversed. So consequent encroachment supported price. We reclaimed the August, what was it, like 7th or something, new day opening gap. Around here, price was bouncing off top of it. Relative equal highs above. That was an easy long. Beautiful easy long. Ran up in less than 10 minutes. 100 handles. Like that. Now we're inside of this SIBI. I'll go ahead and highlight it. You also have a mitigation block, but I tend to not use those as much. It's just good to know. It's not my motto. Now what am I expecting here, right? We can either continue higher until we hit consequent encroachment, or possibly start going lower. Basically disrespecting this SIBI here, this volume imbalance. And if we made a fair value gap inside of this 15-minute fair value gap, like it is doing now, that's inception. So I would be able to take a short here, targeting these lows and the 15-minute BISI. Let me make this so we don't get confused. I'll make it a dashed line instead of a solid line because of the quadrants. It's a solid line. Trade below the 25% quadrant, but we also respected the SIBI even though we balanced it fully. Kind of want to see where it stopped, right? Whoops. There we go. Yeah, so see how price respected this? Next target would be this consequent encroachment. And we're just stalking price right now. I've taken a couple trades. I've already posted them on the YouTube channel. I'm not in a rush to take a trade at all. You should never be in a rush to take a trade because emotionally charged money decisions are almost always wrong. I'm actually interested to see where it stopped here. Man, it's too clean. Yeah, consequent encroachment of this. I would say that I don't know if we would take it out today, but based on the liquidity that's above here, this Wednesday high, I would like to see that taken out personally. Also, new week opening gap, we'd probably want to, reprice through this as well. I'm just holding off here. Fill your swing right here. With this failure swing right here, this is a mitigation block. This is also an inversion fair value gap to go down to these lows. I want to see it make a fair value gap too. If it was up to me, I would take a short here and be kind of aggressive. But since I'm live streaming, I kind of want more validation for this. Because it can go either way, right? Like, we're in a 15-minute SIBI, yeah, so it's further reason to go lower, but consequent encroachment is so close. I almost prefer that it would go up and just tap it and then still close inside the SIBI. That's what I would like to see. To then have a scalp to go lower, or not even a scalp, that's a 100-point move, right? I should probably play some music in the background. Sorry about that. And yeah, I mean, if you guys are traders, as you guys know, it's kind of boring. I wouldn't say it's really boring. I would say it's kind of boring because you're just waiting, you know? There's nothing wrong with that. I like it though. I don't think there's anything else in this world I would rather be doing. Absolutely nothing. So I have volume imbalance here inside of this 15-minute SIBI. I want to use that to target this low. I want to see if it gives me the entry. My stop loss is above the failure swing. Failure swing's at 434. My stop loss should be right there at 434. Kind of hard to get it though. We'll put it at 430. Sorry, the high is at 434.50. Excuse that. There we go. If it doesn't give me the volume imbalance entry after it touches this fair value gap, it's because of this mitigation block right here in the middle. And also this inversion fair value gap that I noted later or earlier. But we hit that. I want to see if it just wants to come up and just tap that volume imbalance. I'd really like that. We also have a new week opening gap below here. I like that it didn't hit the new week opening gap below to the tick, right? And then reverse. It went a couple ticks lower. It's nice. Shows some weakness. That's how I would take it. Now it hit it to the tick. So we'll see what happens. About 20 handle stop. It's not too much. I'm up 1600 on this account, right? Yeah, 1700. So not too worried. Man, oh man. What's the open on this? 414. The high on this candle, 413.75. There we go. And I want to see if price goes down here to this 15-minute fair value gap, takes out these lows right here. During this whole trade, I'm not going to really move my stop loss much at all until we get below this new week opening gap low. If we get below the new week opening gap low, I'll move it to above consequent encroachment of this 15-minute SIBI. Super precise, super nice. I like how it reacted to it. It didn't even hit the top of the volume imbalance right here. And this is how I trade, guys. Like during the videos, you might see that I'm drawing out all these lines and writing the text and all that stuff, but I usually have nothing on my chart. Just a few boxes at that, and one line for my drawn liquidity, you know? So, yeah. And I expect this to be kind of like a back and forth move. So after we take out this low and enter this 15-minute fair value gap, I'd expect us to go back up and hit consequent encroachment. It's a lot of trading, right? You don't have to take all those setups. You really don't. One setup a day and you're good. You're done. ICT mentioned in a video whenever he was showing his brokerage statements at TD Ameritrade and whatnot that it's not the size of your trades. It's not how much contracts you use or anything like that. It's about the velocity. That's what really runs up your trades. That's what really runs up your account balance is velocity. I'll draw a line at the high of this inversion fair value gap. I'll put it like a different color just so we can see it better. Let's make it white. Is white good? I think white's good. Let's also make that white. Look how the body is closing below this fair value gap right here. It's closing cleanly below the fair value gap. This one opened a little bit above the close of this candle. The close was 412. It opened at 412.50. So there's a small little volume bounce there on a smaller time frame, which is kind of nice. I don't even have to go down to a lower time frame to know. It's kind of like momentum, right? Like it's pushing price quickly lower. So let me see. Maybe we can see it on a 15-second chart. Yeah, slow volume imbalance right here. Close, open. You see that close? 412, open at 412.50. What about a 5-second chart? Do we see it there? Yep. Open at 412.50. Oh man, we gotta go to like a seconds chart for that. So I'm not gonna do that. Go back down to a minute chart. Or go back up to a minute chart. So we came back up, tapped this fair value gap again. Mitigation block, volume imbalance, fair value gap. We came down below new week opening gap right here. Closed below it. Now I can move my stop loss, and I'll just move it to the top of this fair value gap. My stop now is 7 handles. 140 bucks, right? So it's not bad at all. I need to set a I really need to set. Oh, I have my government risk disclaimer. Cool. Perfect. And it should move pretty fast here. You want to see it just fully disrespect this. It can tap the new week opening gap. If it does, I want it to act like resistance, right? I just want to see it hit it and come down quickly. It's kind of dilly-dallying around here. We have another small fair value gap here, I believe. Let me see. No, we don't. High of this candle, 399.50. Low, 399.50 is perfectly balanced. Low, or low, high, low, high, high. Low, high, lower, low. I want to see it come down quick here, or else it's just going to go higher off of this fair value gap. A lot of my trading, I know a lot of people have like mechanical strategies and whatnot, where it's like they only take a trade if I'm below weekly open, and if I'm below like midnight price, if I'm bullish, or like only if we take London high and I'm above midnight price would I short, and all that stuff is good, but that isn't the only way like that I like to trade. A lot of my trades are discretionary. So a lot of my trades are discretionary, and I feel like it's almost harder sometimes, but I just can't see a world where all my trading is mechanical. Unless I was using like an algorithm or something, right? Where it just, of course, there's no discretion there. It either follows the rules or it doesn't. Volume imbalance right there. I'd love for that to close below. We've already passed on this volume balance once, once, or one time up, then back down, that's two, up, back down, that's three, or four, I should say. But we never had a candle close above it, or on top of it, right? I believe ICT mentioned that for a volume imbalance, you want to have a candle close above it on that time frame that it was made. So like if you had a daily volume imbalance, you want the a daily candle to cover it, to close it. But even then, I think you said that still can be used. I have all these notes. I gotta find them. This was from like 2023's mentorship on Twitter. Came back up, hit the smaller on volume bounce again. So price isn't really showing me a willingness to go lower. Um, Hit the 15-minute SIBI and the inversion fair value gap one more time. It's already tapped it once, two, three, four, 5 times. If we don't go lower here, I'd put my stop loss at like break even and just wait to get stopped out, pretty much. Because I don't like how many times it's coming up and hitting this right here. I like my trades to just be smooth. You get in, it does what it has to do, but it's consistently moving closer to your target instead of this back and forth price action here. Unless it's showing me signatures like premium arrays that it comes back, hits, or showing me weakness. And with the candle body closes, it's showing me weakness. But I think it's just making this like a low resistant liquidity run for later. For when price gets down here to this 15-minute BISI. This is just a smooth, it's like a trend line phantom. If you're familiar with that. Retail probably see this as a trend line and they'd like to go short when it hits it. So when price comes down, they're probably going to be like, man, this trend line right here, it really was really pushing price lower, you know. So when we get to this 15-minute BISI, if price starts coming back up, they're going to be like, man, I would short that right there, you know. And then they get their ass handed to them. So that's what happens. Another close below new week opening gap. Gonna go ahead and set my stop loss, break even. You just want to see this. It's a little bit below break even. Two handles, 40 bucks. It's nothing. You want to see us continue lower now. Disrespect this SIBI. Use new week opening gap if we have to, but continue lower into this 15-minute buy side balance, sell side inefficiency here, or right here. Sorry. There you go. The low on this candle is 18,355. That's where my target is. If we get stopped out here, I'm not too worried. We have a small volume imbalance here. Go ahead and draw a line there. Price came up, hit it once. Look at the high of this candle at 18,393, and the open of this candle was 18,393. Closed below new week opening gap as well. It can do all this movement up. I just want to see where the body closes. That's what's important to me. Because if you're worried about what the wick is doing, then you're probably not pretty confident. You're probably scared of like getting stopped out, so you're probably worried about where your stop loss placement is at, and the like. As for me, if I get stopped out, I'm not worried. I know it's likely to go there if we disrespect the new week opening gap. So I'm not worried about it. Pretty big new week opening gap too, right? From 390 to 513, 200 handle gap. It's pretty significant. Then once we get here, you pause. You know, you're not in a rush, or at least I'm not in a rush to take another trade or anything. I'm more so interested in seeing what price does. Is it going to show me a SMT at the lows and whatnot? I'm gonna just go ahead and close this. And when to put your stop loss on below entry, please. So here, I'll show you guys the execution. So we got in at 18,414, got out at this low. It's gonna go lower, but because of the trading combine that I'm doing, I can't earn more than 50% in one day, right? So that's why I got out on this account. But I'm actually gonna just switch to a next account. I think on this one's already at 1800. This is the one I took the 7 a.m. trade on. So boom, target hit. And to answer your question, Magical Trader, how do you know when to exit the trade and when to put your stop loss on below entry? So to exit your trade, you should have that predetermined before you even take the trade. You should already have an idea and a reasoning of why is price likely to go there, right? So if you weren't here, I'll explain like the thought process, but the thought process behind this short that I took at the volume balance right here to this low. The reason that I did it is because of a couple of things. We have a 15-minute SIBI here. We have a 15-minute SIBI with the lower quadrant of the new week opening gap from August 5th. So I was looking to see if price, when trading up here, I waited for it to give me a signature that it wanted to go lower. What was that signature for me? That signature for me was that, well, we first had a failure swing. Ideally, I would want it to be this right here. So like, imagine that you have a swing high here, price comes down. I would like it to be a higher high, and then it has that market structure shift inside of this 15-minute fair value gap. The reason being is because it ran stops, it ran any buy stops above this high, right? You can just imagine, like, let's say that this high was higher than this high right here. This high higher than this high. It ran buy stops. So anybody who went short early, they got stopped out. Market makers or IPDA or whatever you wanna refer to it as, they ran the stops one more time, got a better price to go short, and paired their short orders with buy stops that were resting at the market. So I would really prefer that. But the other option is that we got a failure swing. We came down. This candle went lower, made a volume imbalance, and also disrespected this SIBI. So yeah, like a unicorn, you know, a breaker and a fair value gap, right? That's one of my favorite entry models, but it requires a framework behind it. So price came down again, closed below this SIBI right here, came back up. Inside of this 15-minute fair value gap, we have a volume imbalance, and we also have this inversion fair value gap. Inside the inversion fair value gap, you have this in volume imbalance, right? So I would prefer personally to get this entry right here, which you guys saw. I got that entry right on this candle, and instantly it went lower. I love to see that. I love to see instant reactions to my entries. Price came back up, hit the volume balance. Look where it closed. It closed below the low of the fair value gap. Came back up, closed at the low of the fair value gap. Then it started to make its way lower. We came back up, tested it one more time. I really don't like to see that, but I allow for it because you can't like force your will on the market, you know? As long as my trade is still showing me that it has signs of panning out, especially where the bodies are closing, then I'm perfectly fine with whatever it wants to do. I still have this 15-minute SIBI backing me. On this time frame, look at the candle bodies are closing. Look where the 15-minute candle bodies closed. Basically at the low of that SIBI. And we also have relative equal lows here. We have a failure swing here with the draw liquidity being this BISI. So we would want to come back in and give it some sell side delivery. Now, we're below this new week opening gap. We're inside a BISI. We're inside this reclaimed BISI, which is from here, this 15-minute BISI. Price traded down, disrespected it, then price came back up, closed above it, reclaiming it. $9.40, let me check. So at 9.40, yeah, I took the same short. What I was targeting was new day opening gap at 18,066. So let me see. I'll actually show you where that's at. So is it right here? What's the close on this? Yeah, this is it. So you can put a line right there. That's your new day opening gap high, and then your new day opening gap low, which is actually what we were working in yesterday PM session. We came down, boom. We'll put a fib on that. And so let's say that you got short here. You have a 15-minute fair value gap. Price came up, hit it again, dropped, tried to come back up, dropped. Fair value gap right here. You could have went short here. It dropped, came back up. It took this high. Really important because I didn't enter here. It took this high. It dropped again. And then I went short using this breaker right here. You have your high, your low, your higher high, then your lower low. It gives you a breaker and a fair value gap and a volume imbalance. You could have chose any of these three. And what was your target, right? Why would price want to go lower? You could simply say because we're in a 15-minute volume imbalance or 15-minute fair value gap. Price is going to want to draw into that. But I feel like you need more of a reason because who's to say that that can't be a breakaway gap, right? So the other reasons that I would use is because first off, we have a new day opening gap right here. I don't have it drawn. I have it on my other monitor, but we have a new day opening gap here that we close below it. And we have a new day opening gap down here that we could trade into coupled with this 15-minute BISI from the 8:30 news. So I went short there. Price dropped and look where it stopped. It stopped at consequent encroachment, right? So now you should have kind of like a shift in your understanding where, okay, price dropped, hit the consequent encroachment of this new day opening gap. From here, we're inside of 15-minute BISI, and it's showing a willingness to go higher, right? So now everything shifted from being bearish to target this to being bullish. Market structure shift here. We reclaimed, or not reclaimed, I shouldn't say that. We came back up above a new day opening gap here. Let me pull up my other chart. I'll actually draw it out on this chart too, so it's easier for you guys to see. But it's the August 5th new day opening gap. August 5th, yep, this is it. So we have the close right there, the low and the high of it. Draw that out, fib. Look at this, price. Yeah, your NDOG. NDOG is the magnet, your new day opening gap. NDOG, new day opening gap. NWOG is the new week opening gap. So price was supported by consequent encroachment of your NDOG, came back up, went above and closed above this new day opening gap from August 5th, and you have relative equal highs here. So you have a whole framework to frame a trade. Like if there was one trade, like I only had to take one trade for the rest of my life, this would be it inside of like a market maker buy/sell model. Second stage distribution. I'm a little greedy with that. But we have a market structure shift here. We close above this new day opening gap. Look where the bodies are closing, guys. Look where the bodies are closing. Not to mention that this wicked into a 1 minute fair value gap and the upper quadrant of this new day opening gap. What were your targets? You have relative equal highs here. Relative equal highs. And this 15-minute fair value gap right here that price would want to draw into. So yeah, it's beautiful. Real quick though, real quick, I want to take this trade. I'll check out the 8:30 time because I took the trade at 8:30. Don't run without me, please. Anyway, well, I'll have it on this chart. I can see it. But 8:30, 8:30, I had an inclination that it was already going to go higher because we have a bunch of new day opening gaps. You don't know how to make use of that. You gotta watch ICT's videos, man, the live streams. He's explaining the narrative behind it's a whole narrative about how to use new day opening gaps. Or they can be used as targets, they can be used as support and resistance levels, they can be used as really so many things as PD arrays. So yesterday in ICT's live stream, he mentioned that new day opening gaps and new week opening gaps will always be useful. The underlying narrative and the engineered liquidity is key. So if price, for example, price prior to hitting this new day opening gap, it made these relative equal lows. This is relative equal highs. This is engineered liquidity. These are engineered. They wanted to go back higher, but they needed to be at a discount. What better discount is there? 15-minute SIBI. If you take the low to the high of this range, the low to the high of this range, right? This is a dealing range. This is a dealing range. Why is it a dealing range? Let me actually delete this real quick. Prior to this run up, we took sell side liquidity right here. Then we came back up. We came up. We took buy side liquidity here. So this is a dealing range, right? Sell side and buy side liquidity were taken. And price came down into a discount, hit the new day opening gap, consequent encroachment, coupled with the 15-minute BISI, and I'm about to blow your mind, but this is actually 15-minute consequent encroachment as well. We're really close to it. Look at that. 15-minute consequent encroachment for the fair value gap and consequent encroachment of the new day opening gap, and price soared higher. I didn't even take that trade, and I was already framing it around that idea, right? But which trade did I take? I went ahead and took a long here at this new day opening gap to target these relative equal highs. I wasn't worried about if it was going to travel over here because this is a 100 handle move. I don't care if it's going to do whatever, if it's going to go so far or whatnot. I'm not worried about that. We see that price respected this 15-minute BISI. I would love to go long right here. Why right there? We're below new week opening gap after we closed above it. The framework, or like the narrative, is already that we're going to go higher and target this high. So I would love if it gives me this entry, but it probably doesn't due to this breaker being here. Well, I wouldn't know what your target is, man. I don't understand. I wouldn't know like what was your framework or what was the whole narrative behind the trade. So I can't say, why it didn't work or why it did work because I don't know why you were even taking that trade, right? Like, it's too many variables. I'm just here to show you guys how I trade and how I think of the market, how I see the market. It's not going to come back, is it? How I see the market and how I take trades, my thought process on this stuff, risk management, stop loss. I don't think I'm super great at all, honestly. It's only been 4 years that I've been doing this. There's people that are way ahead of me and they've been doing it for even less time. So I don't think I'm that great. You can say that your framework is what ICT taught, but I don't know how long you've been trading, like there's a lot more to it. I'm gonna go ahead and buy in this breaker here. I'm gonna have my low I'll actually have my low right below, just a tick or so below the new week opening gap. I'm expecting this fair value gap. Actually, I have it at the low of the breaker. I'm expecting this breaker to support price, and we're gonna run these highs. I'll actually have it at consequent encroachment. So yeah, so just because we took sell side and have a unicorn doesn't necessarily mean that we're gonna go higher, right? So I'll frame an idea so you can think about it. Let's say that price made relative equal lows inside of a 4-hour SIBI. Let's say a price made relative equal lows inside of a 4-hour SIBI. Then came up, right? Made a unicorn after taking those relative equal lows because we just took sell side. Came up, you took that trade when it dipped into relative equal lows, and then it just kept going lower. It didn't respect the bullish breaker or the fair value gap or anything, because you can't just simply base it on whether it took, sell side liquidity and it showed a breaker and a fair value gap when the higher time frame is showing you that you should be going lower. So it's not that simple. The number one thing is drawn liquidity and narrative. So I'm taking this trade right here. because we're back inside this new week opening gap. We have a bullish breaker here. We were inside of a 15-minute fair value gap that showed a willingness to go higher after hitting the reclaimed fair value gap right here. And what I want to target is this high and consequent encroachment of the new week opening gap. If I get stopped out, it is what it is. Let me make sure it's at the low of the breaker. If I get stopped out, it is what it is. It's just making a 5-minute fair value gap here, so it probably wants to dip into that first before running up those highs. Even though I'd like to see it just as a balanced price range, like. Yeah, so we got stopped out here. That's fine. Like a 15 handle stop. I'm gonna leave the sell limit here because I know I will get another long. Go ahead and draw this out. This is a 5-minute fair value gap. Balanced price range, really. Let me actually take this off before I forget. $15-minute fair value gap, still denied price, but we're gonna trade into this 5-minute fair value gap hopefully. Start this move higher up here because it already filled in this 15-minute fair value gap. There's no like little gaps, right? So if the wick only came up to like here, there'd be this little gap here. What are you guys talking about? The same thing that you use for Forex, you can use for futures. It's all the same. IPTO works the same in every market. You talking about 7? I can show you a trade at 7 a.m. that worked at in the first 30 minutes. This trade right here. So I'll draw a vertical line right here. That's 7 o'clock, right? I'll even go here on the 15-minute. Let's say that it was 7 o'clock right now, right? First off, the model that he was showing his son is that you wait until 8 o'clock to target relative equal highs or relative equal lows that were made during the 7 o'clock hour, the 7 o'clock range. But 7 o'clock has the function of going back into the London range. So what does that mean, right? If this is a London range anywhere from 2 o'clock all the way, so you from this low, let me see, there's not even another higher high. So from this high that happened at 229 to this low at 344, 7 o'clock just has to go into this range. If it was trading all the way down here at 7, you would expect it to come back up into the London range. That's the function of it. So the trade that I took was we had a 15-minute fair value gap here at a discount. You extend that over past 7 o'clock. You extend that. You see that price, it came down, then it came back up before 7 o'clock. Reclaim this fair value gap. You could even use this one. This is SIBI. You could use as an inversion. It's at the same level. It's a discount as well. So after 7, we came up, took sell stops right here. That's totally up to you. You know, like whenever you want to start live or something like that, you will know when you're ready. ICT says that you should Well, there was one thing during the mentorship where I think it was a challenge where everybody started a paper trading account with $10,000 on the paper trade, like a demo account on TradingView, and you had to run it up to 100K to see how consistent you would be. But I don't know, man. That's totally up to you. I I would not like to give recommendations on any of that. But anyway, back to this. We have this 15-minute fair value gap, right? We took sell side liquidity here after 7, came up, closed above this 15-minute fair value gap, hit consequent encroachment, and we have these nice highs here. You could say, but Chris, we have these nice lows here too. But what is the higher time frame telling you, right? In this case, the 15-minute time frame is that we're going to use this 15-minute time frame as our higher time frame discount array to target these highs. And was it this one? I took that trade. I took that trade. 1 minute breaker. I went long there. Inside of the breaker. Literally zero drawdown. And I actually didn't even get the best entry. I would have really liked to get the entry down here at around 960. 960 to 18K. That's 40 handles, bro. I got 25 handles from my breaker entry to that high. And that was it. I didn't take another trade on this account until the loss that I took up here. Or, let me see. Till the loss that I took up here. For 6 handles. You know? Yeah, but he said lows and highs post 7 a.m. That's for the 8:30 or 8 through 8:30 model. The range or like the look back still works the same. 7 a.m. if you can go back to the live stream. I have it in my notes. At 7 a.m. a look back function starts, where price will look back to the London range. Price at 7 will look back to a London range. To the London range. That's its function, to trade back into the London range. Eight through 8:30 and whatnot, it will target relative equal highs or relative equal lows made at 7. We can compare notes through it. I'm totally fine with that. Anyway, I'm gonna see if this is a long right here. To hit consequent encroachment. Took sell side liquidity here. Anybody who got long like me early got stopped out. Nice respect for the volume imbalance right here. I'd be willing to take that. I should have been a little bit quicker on the draw, really. But we'll see. There's a plethora of entries. Yeah, no, there's no argument here, bro. Trust me, I'm chilling. I wouldn't be upset or anything like that. I'm not really confrontational over minute details. Just saying, you can always look back into it and see. I'm gonna stop trading at lunch though. I'm gonna go get some food. Haven't ate. and then target this high. Using this 15-minute fair value gap, we're trading inside a 5-minute fair value gap as well. It could go lower. Do I want to see it go lower? Not really. We use a 5-minute chart, drop a fib on it from high to low. We didn't even hit the upper quadrant of that, so I like that. You want to really see it push up now. 387, 438. Be a clean move. You want to see it just be a low resistant liquidity run higher. If not, it's going to do one more stop run into this. No, yes, that is what he said. You're right. That's what he said. That's what he said to his son. That's what he said to his son. But you can look at my channel. You can look at my channel. There's a video where he commented a smiley face, and in that video, I took a short right after 7 a.m. two lows that were made at 6 a.m. So you're not wrong. You're not wrong, but we're talking about something different. You're right if you're using that for targets after 8 o'clock. After 8 o'clock, you would look at equal highs and lows that were made after 7 to target. To be taken a look to trade back into London range. Yeah, and we did make 7 a.m. highs. It doesn't have to be relative equal highs. It could be a stop run. So I don't even know if I can go that far back, but let's see. I'll go this far back to show you. So it was over here. Over here. This is the trade that I took. So I'll put a vertical line right here. That's 7 o'clock, right? 7 made relative equal highs. But this is an important thing. This high came out at 18,461 and with 50 cents, right? 18,461.50. This high was 18,461.75. So it is not a lower high to the right of it. It's higher. Meaning that it is less likely for price to come back up here after, if let's say that you traded this for value gap to go higher, it is less likely to do that because it took this right high is higher than this left high. It took any stops that were above this, any buy stops. Anybody that went short, they got stopped out. Price came down, fair value gap made, entry right there. What is the target? Look at these relative equal lows right here. These were the clean relative equal lows. Look at this. This is like a trend line, right? This low resistance liquidity run right there. Easy peasy. And it's on my YouTube channel. It was from a day ago. Yeah, a day ago. It's called NQ Futures. Short to relative equal lows, draw liquidity, something like that. But yeah, that was a trade, and it was a nice trade. It was like 50 handles, 60 handles. It's a nice trade. Kind of dilly-dallying around in here. If I take one more loss on this account, I'll probably switch off of it. And also lunchtime is coming up. Do you see the buys there? Where? Here? I like that the body is closed above. Consequent encroachment. I know it's gonna go higher, man. It's just being tiresome right now. Just being a little annoying. Plus, I also feel like I missed the best entry. Oh, buy 822? Yeah, yeah. There is a buy. There is a buy prior to 9:30 to go up to the previous day high. Yeah. Yep. I wanted to see 8:30 push price higher and take the 7 a.m. equal highs, but it was just kind of like loafing around, you know. It wasn't really doing much. And then 9:30 came and it was a straight rocket up. And then because no news in the morning, give me 1 second. I can't really see your comment because this thing is blocking it. What were you explaining the trade you took Act made a reaction to? What do you mean? Buys at 822. Hold up. I want to see if I can catch a trade here. To these longs. I'm already done on 2 accounts, but I want to see if I can get this account up. 1806, 2635, yeah. I want to see if I can get this account up. Where you explain the trade you took ICT made a reaction to? Oh yeah. No, it wasn't a buy. It was that sell. Yeah, ICT commented on that sell from Wednesday the 7th. That 7 in the morning short to the relative equal lows from like 5:50, 6 in the morning. Yeah. I don't know how he saw that video, to be honest. I think it's because I mentioned I think I mentioned the live stream, and I guess YouTube sends him a notification. I was hyped. I was hyped up on goofballs. It really was. So, oh man, we're just trading. We're gonna go higher. Unless this new weak opening gap is gonna send us lower, and if so, it's gonna be down here into this BISI. Did we even? Oh yeah, we did hit 75%, didn't we? No, we didn't even hit 75%. Whenever price hits 75% or the lower quadrant of a BISI or the higher quadrant of a SIBI, right? So imagine this was a SIBI and price was coming up. If it hits that upper quadrant, I would consider that as a warning. Like you probably don't want to take another short. It's probably not an entry that you want to be taking. Just after the sell I took, oh, I stopped looking at the chart until oh yeah. At 822 a buy? Yeah. Or maybe not at 822, but I did take a buy prior to the news release. 822. 822. Yeah, there's a buy here. I'll explain it. So what I had on my chart was this fair value gap, this 15-minute fair value gap right here. I'll actually switch to the account that I took that trade on. So in here, you see this low, the swing low. I'll actually move this for now. You see this swing low right here. Price at 815 came down, took that out, and closed above. Using this fair value gap, After we took out this low, price came down. It used this for value gap to swoop that low out, and then we came up. Prior to 8:30, we came up. We disrespected this SIBI. We disrespected this SIBI. We disrespected this volume imbalance. Look how we closed above 3 PD arrays, right? Or 4, right? Because there's this volume imbalance as well. Oh, not today's? Oh, man. Yeah, no, I'm lost. I'm lost. You're talking about Wednesday the 7th? Let me see. At 8:22. Let me put up. Wednesday 7th at 8:22. I got you. Talking about that. 8:22. 22 right here. Oh yeah, no, I didn't take this long. I didn't take it. It makes perfect sense. It really does. It makes perfect sense. It makes perfect sense to go long here. We took sell side down here, these relative equal lows. We have relative equal highs from here. It made perfect sense to go long here. Whether you took it at the order block or the fair value gap or whatever, it made perfect sense. Yeah. Yeah, no, this made perfect sense. I tried to take a buy. I'm not gonna lie to you. I tried to take a buy. My entry was here. I took a buy at this smaller fair value gap. I even took one here as well, looking to see if we would want to travel into that, but we didn't, right? So whenever we fail to go higher, even though I know the draw on liquidity is higher, I know it's these relative equal highs, and it was previous day high, which was, let me see. This was previous day high. This was Tuesday's high. We were trading right below that. We had relative equal highs. I know price is going to go up there. I just know it. I feel it. Like it's such a strong conviction. So I went long. You took it at an inversion fair value gap over here or over here. Anyway, I went long over here and price went up initially. It took this high, went up one more time, then failed to go there. By this time I already had my stop loss at break even because I see the lack of momentum. I see the lack of actually wanting to do anything. Then I got stopped out. I took another long when it touched this here. My stop loss was below this volume imbalance. Price went up, did that around, went up again, left more relative equal highs, and by here I had my stop loss at break even because I know 930 is just around the corner, and sometimes price gets volatile before 930 even. But in hindsight, I shouldn't have moved my fair value, my stop loss. That was a mistake. My stop loss was safe, and I should have left it there. But I did get long here. At this 930 candle, it dipped down 1 minute fair value gap. We still have these highs and previous day high. And it was a real quick thing. You know, 930 open, it went down for a couple seconds and went higher instantly. So yeah, took 2 minutes to get that trade. Yeah. What's the high of this? 481. 481. Yeah, right there. Yeah, that was a clean trade. If you held from 822, that was nice. That was a nice trade. Very nice trade. Like how the bodies are respecting this 5 minute fair value gap. Finally. That became bullish, yeah. Bullish inversion fair value gap. This is all pretty ugly. Like I know it's gonna be higher, but it's giving you work for it. So I would take that long, man. I'm loafing today. I'm just gonna go ahead and take it if it goes lower. Or even if we reclaim this small fair value gap on the 15 second. Yep, reclaimed it. I'll put my stop loss at this short-term low. Or at this low because we ran sell stops here. You see this small little fair value gap? I'll zoom in for you guys. I don't know how good the quality is. This small little fair value gap, closed below it, then came back up, closed above it, reclaimed fair value gap, It's on a 15-second chart, so you know, like slippage and all that. I think I hit it inside this fair value gap, but broker thinks otherwise. Stop loss at this low. That gives you another opportunity. New week opening gap as well. I just want to see new week opening gap support price, and we run up and take out this high once and for all. Or even these highs. These highs, this is a relative equal high right here. These two highs, right here, relative equal highs. I really want consequent encroachment, but I think that's a little greedy. You're looking at a what, 60 handle run? It can totally happen right here. We've already been kind of consolidating a fair bit. Just back and forth movement. Came into the 15-minute fair value gap. Hit consequent encroachment. The bodies of the candles are closing above consequent encroachment right here. Then shifted higher. 5-minute time frame. 5-minute, you see the fair value gap. It came down, came back up. Came down, came back up. Came down again. Yeah, no problem, bro. It came down again this 5-minute. Finally closed inside of it. Rebalanced it fully. And hit this 5-minute fair value gap as well, which is the 15-minute fair value gap. Now we're going higher. How often do I stream? This is actually my first stream. I said that I would stream anytime that ICT isn't live or if he finishes early. Because I don't really like to trade after lunch. I don't really like to trade the PM session. I'm more of a morning session guy. I get my trades in. Then I go spend time with my dog, really. I go cook. I do whatever I gotta do. And yeah, I like to be finished by 12. Typically, I like to be finished by 12. So let me explain this trade real quick because I think it's going to deliver pretty fast, I would hope. Price trade into this 15-minute fair value gap. If we have our fib here, price hit consequent encroachment twice, but it didn't close below it or anything. I would have actually liked if we just went at the 25 upper quadrant, but we were inside a 15-minute SIBI here, so it's understandable that it needs to go to consequent encroachment. Then we made a 5-minute fair value gap right here. Price traded into it once, twice, 3, 4 times, right? Or 3 times it opened inside of it, and now we finally get a run up. On this candle though, the low of this candle hit the 15-minute fair value gap. And I think that's probably what prompted this run up, or maybe this order block, you know? But yeah, I want to see these highs taken out. The 11 o'clock high and the 11:31 high. And then the real buy side liquidity, I would say, is at the 1050 high that happened in a macro and consequent encroachment. So of the new week opening gap. So 3 targets, right? If I had more than one contract, that's how I would take profits. I would have my first TP at these equal highs because we're back inside of this 15-minute SIBI. So just getting these highs is nice. Then buy side liquidity here, and ultimately consequent encroachment of the new week opening gap, which I'm confident it's going to deliver to. That's what I'd like. But market does not care what I like. So I'm going to just put the sell limit here, and then I'll stay with you guys to see if it's going to actually deliver to that consequent encroachment and just see how it reacts to it. I'm in a Telegram group where I would always share my thoughts, share my trades, share my thought process or framework around the trade. But I'm pretty much a loner, man. I don't like other people influencing my decisions, you know. Well, I never let other people influence my decisions, first off, but I don't like the other opinions unless I'm using you for sentiment, which I wouldn't want to do. So this high of 419.75, another high of 419.75. I kind of love seeing that when I'm bullish. I just love when price just stops on the dime like that. If it's for the right reasons. Like if we stopped on a dime like that to come down to then go higher even faster, because somebody's going to think that that's resistance, that's what I like. But in this case, it could be resistance. Like, I mean, we have the quadrant right here, the lower quadrant for this new week opening gap. We're trading inside of 15-minute SIBI, even though it's already been fully traded into. So let's see if price is supported here. I'd want to see this down close candle support price, specifically the body. If we trade back into it, that's what I want to see. We also have a breaker right here. 1 minute breaker. So my stop loss is below the breaker. It's also only 4 handles. If I take this loss, I'll go ahead and dip out of here, go eat, go do whatever I need to do. Volume imbalance inside this breaker. We hit the down close candle. That's nice. I want to see it move quickly now. Quickly. If this was a market maker buy model, that's second stage distribution right there. That's how I see it. Take it with a grain of salt. We went ahead, took the equal highs. Right here, cleared. Boom. Equal highs taken. And we hit the 25% gradient, or on the lower quarter of that new week opening gap. I'll go ahead and show you guys one more time my chart. So this is what I have on one side of the chart. This is just a whole bunch of new week opening gaps. Look at that. And then let me save that. On another layout, I have my new day opening gaps. So when we were trading at 8:30, you have all of these new day opening gaps above us. Plus on the 4-hour, you had this this SIBI right here, this 4-hour SIBI that price would want to trade up into. Because of all of this new day opening gaps, we had relative equal highs on the 7-hour range. So yeah, let's go back to new week opening gap and put this over here. I probably should have closed at this high, but I did say that would be my first profit target, right? But no, I'll hold until this one, even though it's getting a little bit into the lunch time. Lunch usually sweeps a 15-minute high. Now I don't know if it's swing high or just a candle high. Something tells me it's just a candle high, so we'll see. We'll see if price wants to continue trotting up a little bit, but you see the nice reaction to his down close candle supporting price, even after it took that buy side. So I want to see if it still shows some willingness to go higher. And yeah, Faluda, you guys are the first ever people to see me trade. See me trade live anyway. I've shared my chart executions and my entries and stuff before. I love it, bro. This is a science. Everything is a science. There's a reason behind every tick movement. There's a reason behind every single thing that happens in this market. Everything. It's all manipulated. It's all scripted. And I love that. Why would I be mad at that? Fuck me if it would be random, right? Random buying pressure and selling pressure. God, that shit would be annoying. That'd be terrible. I shouldn't use the Lord name in vain. But that would be terrible. Then it'd really be luck. It'd really be luck. I'm gonna go ahead and move my stop since we just took that high. Just below the breaker. This is another breaker right here too, so I can actually use this one. Yeah, you guys, I want to be like the next Trades by Matt, you know, or like the next Tanja or something. The only thing with me is I feel like when you stream, you constantly like have to be talking and stuff like that. And for a long time, I wasn't that guy. I was really quiet. I just like to trade. I wouldn't really be talking. My inner thoughts were exactly that. They were inner thoughts. You know, I would never really say it out loud or voice it or anything like that. But you're gonna see we're gonna take that high, and the trade ended up working out. So it was the same narrative the whole time, and I still took two losses. I still took two losses on this trade narrative. They were really small, but I still took two losses. And price went ahead and traded into the consequent encroachment of the new week opening gap. Bang. Now if it wants to go higher, that it's got to show you that it's got to show you that the consequent encroachment will support that. And then the first thing my eye draws to is this volume imbalance and these highs. You are writing a story, bro. You're writing, it's going to be the best story you ever read when you go back to read it. Oh yeah, man. I'm just staying. Yeah, you're right. I'll be the next Trader Chris. Everybody's different. I feel like this can be something really great. It is something really great. So that's gonna be it for me. Uh, oh, I took this on this account. I took this on the account that I traded the news event with. Let me go ahead and delete all this stuff from my chart. I don't like having any of this stuff on here. Oh man, I was trying to take this like this trade on the other account. Let me see. Yeah, yeah. So 2 for 2 on this account. Um, on this one, uh, 1 for 3. And on this count, I'm not gonna lie, I overtraded the fuck out of this account. Ugh. I overtraded a lot here. But you see, like, you see the sell here using the breaker. The sell here using the breaker at 18145 to 18094. So the new day opening gap that I was talking about at 99, it was right there. And I have the screen recording, but I didn't post it because it was pretty sloppy, even though I ended up profiting. And then we came back up, used the new day opening gap that's higher as support, went long, targeted these highs right here, sold right here. 90 handles, 84 handles. Perfect, like boom. And then you guys saw this trade, the short here into the 15-minute BISI. But yeah, that's going to wrap it up for me, guys. I think it's been a tremendously great day. Out of everything, up close to, over 5 grand actually, 28, 32, 26, 35, yeah, for the day. So that's enough trading for me. Same time tomorrow. We'll see. I want to see what time ICTs. Oh, tomorrow's Friday. No, I won't be trading tomorrow. I'm gonna help my friend move at his house. He's moving to a new house, so I want to help him out. That's why I was taking so many trades as I was today. Well, I shouldn't phrase it like that. That's why I was indulging in a lot of opportunities today, because my friend's moving tomorrow and I'm not going to trade tomorrow. It's very unlikely that I trade. If I trade, it's going to be in the afternoon, and I really don't like the afternoon session. It's not my cup of tea. I like that morning volatility. Let me check the economic calendar too. See, tomorrow there's no news either, so I'm really not missing anything. So if you guys trade tomorrow, I would really suggest that you take it light, take it easy, because we have no news and we've moved a lot. We've moved a lot. Wednesday from 540 all the way down to about 1800, so 500 handle range. Oh, nope, more than that actually. 883, bro. That's 700 handles in this range prior to the close. Then today, I'll just use New York session, right? So we'll just use like 7 o'clock. 7 o'clock low at 936 to 18,500. Fridays can be a good day to trade, but they you gotta like have a good setup. Like I only like trading Fridays if the weekly objective that I think is the weekly objective was traded to on Thursday. Because then I expect the thank God it's Friday, you know? The TGIF. Appreciate it, Faluda. Alright, guys, I'm gonna head out. Hope you guys took something from this. Just appreciate you guys for being here with me. You guys are pretty entertaining, and I got to explain some things, so I hope everybody learned something. Um, and yeah, go watch ICT stream, bro. Go back test. Go put in the work. Go listen to his lectures. Don't skip through it. You're gonna be missing some things, man. I'm telling you, he does it on purpose. He puts the gems at the very end of the long commentaries, and he knows he does it. It's coincidence. Or he puts it at random moments. Even the last three lectures, I think the first lecture that he did for 2024 mentorship was probably one of the best lectures I've heard so far. And I listened to the 2022 mentorship. I listened to everything in 2023. I even listened to a lot of his private content. I did the core content as well. Like, he hides it. But in that 2024 lecture, he didn't hide anything. It was straight to the point. It was wow. That shit that had me like with the heart on when he said some things about order blocks and why this happens and where to put your fib from those relative equal highs. Um, don't put it on the manipulation unless you're using it for like a dealer. Oh man, it was so great. It was so great. I have a lot of notes on that, on those four lectures so far. But yeah, I'm excited. You guys are gonna see a lot more of me. Uh, I basically just trade for a living, so I gotta fill my time up somehow, and I think YouTube's gonna be a good way to do it. You know, YouTube and the gym.